So hello and welcome to this webinar hosted by Brady on short-term energy trading. My name's Gary Vasey, Managing Partner with Commodity Technology Advisory, and Brady has asked me to facilitate today's session. Before we start, however, just a little housekeeping and a reminder that this webinar is in fact being recorded. Chris, could you give us the first slide, please? So if you have any questions, you can raise your hand to speak. We'd probably prefer that you ask questions at the end. You can use the Q&A section there. And when we finish the webinar, we'll have a short question and answer session. As analysts, we've been watching the short-term energy trading market and software scene develop. And we've seen a new subclass of software develop to support these activities that include automation of trading and the use of bots and algos to help automate it. Short-term energy trading poses a new set of challenges for traders and vendors alike in terms of providing access to data, the ability to trade and schedule in very short timeframes, as well as the ability to automate. It's an interesting market and one that is growing. It's also a market that Brady is involved with. So today, you will hear from a couple of experts on the market and developments. Firstly, Chris Regan, Product Director, Brady PowerDesk. He headed up EDF Energy's trading and operations capabilities between 2009 and 2017. He also helped create the energy market that we have today in terms of energy trading products, helping negotiate the mandatory market-making rules, and helped to make changes to allow customers' assets to be re-optimized closer to real time. At Brady, Chris is leading the delivery of a short-term power trading software as a service platform. Brady's PowerDesk solution will allow energy traders to operate in this new, decarbonized, intermittent, and decentralized world of energy trading. We'll also hear from Dimitri Ishutin, quantitative analyst at Brady, who is responsible for the Edge module of PowerDesk, which covers algorithmic trading and asset optimization strategies. He has a wealth of experience in data science and has worked as a curve trader at EDF. As I said, we'll happily take your questions, but ask that we wait until the end of the two presentations that will now follow. Chris?
Thank you very much, Gary, for that very kind introduction. Good morning, everyone. So today we're going to talk about the energy system before showing us our new product. But the real challenge that I want to face today is the future is now. It is the last day of June. We're in the middle of summer, but we see record volatile prices. As I look at just the most recent prices in the GB market, for example, I'm seeing significant periods where the imbalance price is hovering well above £100 and then dropping very quickly down into the 40s of pounds very quickly. These are record highs of volatility. It was only a couple of weeks ago we had significant negative price periods. And again, it was only in this January when we saw some of the highest market prices going. So we've got record high productions of renewables, especially as a proportion of demand. If we look back to the 5th of April, which was Easter Monday, we saw the lowest ever carbon production of energy on the GB system. So we saw 29 grams per kilowatt hour of carbon dioxide being produced, which is the lowest it's been since the Industrial Revolution. With COVID, we've seen demand destruction, which means demand has been so difficult to predict that TSOs are really not managing it well. And electricity systems out there are facing record levels of low inertia. There's much less in the way of spinning momentum on the systems, which is making the prices again more volatile and the systems pretty much less stable than they ever have been before. The prompt market trader challenges means with this high volatility, the job moves from balancing your own solution to just working out when is the transmission system operator, the TSO, getting it wrong. With this record level of volumetric variance, i.e. uncertainty of what your position is, your position could swing from 100 megawatts short to 100 megawatts long in the blink of an eye. This wouldn't have happened under conventional generations. Then the markets are just trading faster and faster. And you need more and more to make decisions, but we've got such an increased risk of human error. And if you go too slow, everyone else would have traded and you'll get worse price. And if you have the wrong position, then you'll lose millions. So my question, Dimitri, is what do we need to think about in this new challenging world?
Good morning, everyone. Thank you, Gary, for introduction, and Chris for setting the scene and asking the question. Indeed, it's something that we need to answer. When I was a trader responsible for power, gas, and carbon hedging at EDF Energy, there were two factors that helped me succeed and ultimately keep my manager happy: knowing my net open position and delivering consistent P&L any time of the day, no matter what. Now, I appreciate that monitoring net open position may sound like a boring exercise for some traders. However, this is the foundation of any successful strategy. And at PowerDesk, we capture all four elements that impact net open positions: generation adjustments, demand adjustments, several positional adjustments, and netting. P&L is also a fluid substance, hence we monitor system price, net imbalance volume, fundamentals, and technicals to keep P&L in check. And there are two pillars that support net open positions and P&L, which are risk management and clever trading. Risk management entails value and volume at risk, price and position variance, and liquidity. In terms of clever trading, it implies anticipation of unknowns or the risks, automated optimization of assets, and time in the market. Now, I will hand over to Chris to talk about major shifts on trading desks in the last 2 decades.
Thank you for Dimitri for pointing out my age and length of career. So let's think about 2001 versus 2021. The trading desk that I sat on the 27th of March, when the GB market, for example, opened, and 6 months later, when I was on Ontario trading desk, when that market opened, I had the largest prompt optimization desk. We had approximately 100 terawatt hours of production and 40 terawatt hours of demand. But actually, all of the energy we traded was at one hub, one location. So you didn't have to look at price differentials. I had gas CCGTs, I had coal power stations, I had nuclear power stations, had customers, but ultimately, I just needed to remember about 4 strike prices around my gas and my distant efficiency coals. If I could remember those 4 prices and track them with the movement of the fuel prices, I was able to trade accurately. I balanced those 48 half hours in the day. But ultimately, if you look over my trading day, if I could just manage those 4 strike prices, the 48 hours, so 192 data points, I could do it. I could do that in Excel. I could do that in my head. It wasn't too difficult, and I was okay at it. But if we fast forward to the trading desk that I built and left only a year ago, we have virtual power plants. A virtual power plant is lots and lots of very small assets being aggregated up to look like a power station and offered into the grid. We have electric vehicles being charged, but some of them are smart. They don't charge when the price is high. Some of them are even smarter and they discharge when the price is high. That's called vehicle to grid. We have hydrogen production coming in. So you have a value of your stock to arbitrage against high market prices and low market prices. Record levels of wind, solar, batteries, gas engines. So I've got at least 10 constantly moving strike prices. I've got to think about those assets being embedded into the distribution systems. So they've got non-energy costs to put on top of the wholesale, which do move around as well. I now have auctions going for ancillary services like frequency response, daily, weekly, monthly, rather than just set contracts. So I have to arbitrage between wholesale markets and ancillary services. So I've got 10,000 data points to think about. And in our strapline there, this is why humans would not be enough to trade market power in Europe in the coming years. So Dimitri, what should we think about?
That is a very good question, Chris. Indeed, there is a large number of nodes that the trader needs to look at nowadays. We highlight 4 factors in this slide that may help energy traders and asset optimizers find alpha on the market. Firstly, we speak about position closing. Traders require a trading algorithm that frees up their time, because it's all about time on the trading desk, because the markets are rapidly changing. So we want to develop an algorithm that helps traders run little optimizations for them, so traders could shift their focus from the daily routine and deliver value from highly profitable areas, such as the balancing mechanism. Secondly, with a growing number of assets in an average portfolio, it is becoming more difficult to efficiently manage all of them simultaneously. So this is where flexibility optimization engine may help. Thirdly, the system is becoming coupled and saturated. Sometimes it presents opportunities for speculative trading to deliver value with minimal risk. So here we could talk about arbitrage opportunities and balancing different interconnector flows. And this is where we develop algorithms that can help traders leverage such opportunities. And finally, the industry is becoming quite collaborative. So at Brady, we contribute to that by hosting community events, such as this webinar, and offering customers space to test their own strategies by providing things like Python Playground. And Chris, do you think we could show our participants the demo of the product?
Definitely. I will go into that. Thank you very much, Dimitri. So far I've set problems and Dimitri has kindly showed you the ways that they need to be solved. We'd now like to just take you through our latest designs of what we're delivering in our product to meet this challenge. Our product is Brady's PowerDesk. It's made of 3 modules: PowerDesk Core, all you need to enter into seed in the short-term markets; PowerDesk Activate, how you would flex assets to maximize returns; and as Dimitri's alluded to there, his project is PowerDesk Edge and creating those algorithms with data science, which he's doing now to make sure that the trader is ready because the future's now. Thank you, Gary. And we can open up now for questions, I believe.
Yeah, we can open up for questions. Sorry, I lost my screen there and couldn't do anything. So do we have any questions from the audience? Let's ask a question anyway. Chris, why do prices go negative?
Yes, I was noting earlier that it was only a few weeks ago we saw market prices go negative. So in conditions where we have much lower than normal, or summer particularly, demand for generation, you might still see a number of inflexible units such as nuclear generation still generating. And on those sunny and also slightly windy days, you might have a very high amount of renewables generation on the system. And when you get to the point where you can actually meet all of the low demand by inflexible generation plus intermittency, you need to turn something down. Now, if you were going to turn down a gas CCGT, you would basically be able to turn them down at about the price of the gas that they're burning, because they would be in profit if they didn't burn that gas and they took the electricity at the higher price. But if you went to a wind farm, you would say, well, if you offered to give them back the electricity they've already sold for £0, they might turn down. But this isn't necessarily the case, because a number of those intermittent generations also receive subsidies for their generation of electricity, and they might be given a certificate worth, say, £70 a megawatt hour to produce a renewables kind of megawatt hour. And therefore you would think to yourself, well, if they switch down, they've lost £70. So actually what you end up doing, you start paying these generators not to generate, and they'll go all the way down to -70. So the natural floor of the market isn't 0, it's -70. So yet again, we're seeing the impact of intermittency, but also the subsidies creating much more increased price volatility for people as well.
Very good, thank you very much. We do have a question now from the audience. Could the system monitor the market dynamics across BMM, ASM, DNO service market in real time and then decide where to sell the electricity? The question is in chat, if you can see that, Chris.
Yeah. Oh, it's in chat. I'm looking at the questions and answers.
Yeah.
I can see. Can you repeat? Because weirdly, I can't see that one.
Could the system monitor the market dynamics across BMM, ASM, DNO service market in real time and then decide where to sell the electricity?
Ah, yes, thank you. I get that. So at the moment, Dimitri, who will speak up any minute, is working on our stacking algorithm. Our stacking algorithm is all about working out the value of missed opportunity versus the value of locking in a trade now. And so that looks across things like the balancing market, as well as the wholesale market, as well as any opportunities for ancillary services like the DNOs. And each time that you decide to trade, you create opportunity because you might be able to stack more value, or you close down opportunity because you might not be able to deliver that service. So the stacking engine will be able to show you what the value of your power is. So if, for example, if you had an engine that could run in an ancillary service like static FFR and make the equivalent of £40 a megawatt hour, that stacking engine would say, well, don't sell below 41. So rather than automatically telling you where to sell, it tells you the price you need to achieve in the wholesale markets to beat the other alternatives. Is there anything you wanted to add to that, Dimitri?
No, I think this was a very elaborate response, Chris.
Thank you. We have some questions from the audience in the questions and answers. We have one from Marvin who said, what is the pricing structure for the product? The pricing structure is based around the basic installation, which is a good proportion of core. And then the scale up is based around whether you want to add in optimization engines, whether you have lots and lots of power stations, or you have lots and lots of users. If you wanted to get in contact with Matt Bush, who would answer the details here, we actually do have a very rigid pricing structure, which we could scale up for any usage. The additional modules of Activate and Edge are then extra. And again, they depend on the complexity. What we find is for a small entry player, it's a very affordable product, and then it scales up so it can service the larger utilities and oil and gas majors. I have another question from Matthew about, do you make a price forecast for intraday and imbalance? Dimitri, can you tell them about your imbalance price forecast that will be bundled?
Yeah, I could take this one, Chris. Definitely, we are focusing on developing price forecasting algorithms that includes price forecast for intraday market as well as imbalance market, the cash out prices on the GB market. But on top of that, we're focusing on developing the net imbalance volume forecasting algorithms, because ultimately the imbalance price is driven by the system direction, whether the system is short or long. And yeah, on the GB market, where it's getting incredibly volatile with negative and positive prices, this is definitely in scope.
Thank you, Dimitri. We have another question from Matthew. Are you active in the CWE market? Brady is already active through its EDC-BIS, EDM and ETRM products. We are launching PowerDesk in the first year this year in the Nordic and the GB markets. But because we have these strong pan-European scheduling products, we expect to then go live in CWE next year. So we have an anonymous question. You hear some people be dismissive about the importance of algo trading. You clearly don't share that view. What is the key to future algo trading success in the market? I'd like to begin that one, but pass over quickly to the very clever Dimitri, who knows very much about this. I am dismissive of algo trading if it's simply an algo hunting value with no direction given to it in terms of the volume that it needs to trade, or the value of the price of the instrument, the price that it should trade to. So if the bot is essentially very dumb and you have to feed it those things, I kind of find it difficult to see the value of it. Our ethos in PowerDesk is PowerDesk first needs to know exactly what your net open position is so that it could tell an algo whether to buy or sell. And then as we move in, we also have some great suppliers of information out there. You have your LCP and NAC, you have your Anapsys, you have people's own internal views. I do believe it is important to get a fundamentals view of market price into the algo to predict where it's going. If you were to take a relatively inefficient and physically balanced market like the GB market and you tried to balance it with algos working purely statistically, I would worry about their success. If you were to augment it with your own views on market intelligence, those that you might buy, but also very quick updates on your net open position, I see algos as really, really valuable and the future of the market. Dimitri, what do you think?
I think this is a very good question, and it's important to distinguish that there are two different concepts here. It's automated trading and algorithmic trading. And it is a very frequent case when people actually consider both of them to be the same, but they are in reality not. So I think in energy trading communities, automated trading in general refers to the automated creation and execution of trades, which traders were already doing manually anyway. So this is achieved by involvement of different computer programs. And as a software developer and vendor, we will need to write up those programs. And this is what I mentioned earlier in the presentation, where we want to ultimately free up traders' time. And this is where automated trading can help. And algo trading is actually something different. It's intelligent computer science approach to trading, where we have a system that can create its own trading strategy, research market signals, and be self-sufficient and improve itself. So we are working on both of them at the moment.
There is another question there, Chris.
Thank you. My old colleague Andrew Nightingale, formerly of EDF Energy as well, has asked us how mature is the product and how many customers and countries are you live with? So the product was envisaged by Brady a number of years ago. However, we only started cutting code this year in January. We got funding finally approved by our board of directors very late in 2020. We have 2 sales, and we are live in 1 country at the moment, and we're testing in the GB on top of that. So it is a real product, but it is early in the cycle. But it's a relatively visionary product because we don't see much out there at all in competition with it. We have been holding a number of what we call customer advisory boards through my colleague Matt Bush, where we have gained inputs from at least 20 market participants on their needs and requirements to make sure we're delivering a product we feel the market really needs. And that's what we're now developing. And that continuous feedback from the customers on our designs and visualizations like you've seen today, on our assumptions around what optimization algorithms are needed, and the stacking engine that we've created, those are all feeding into the product that will never be finished because it will always be continuously developing and beating the market.
Okay, any more questions? Yeah, another one popped up. Oh, well, no, actually it's a comment. Great to see you, great presentation. Well done, guys. With that, perhaps we will end the session because we're already after 30 minutes, which was the scheduled time. On behalf of my colleagues at Brady, I'd like to thank you very much for attending. And Chris, do you have anything else to say in terms of follow-up? I think there's a slide showing how to get in touch if there are other questions or interest in any other aspect of this presentation.
Indeed. Please get in contact with our team on the email address or via the website as seen. If you want to know any more, we could schedule personal demos. And I believe we did have that specific question about the pricing model. If you are very interested, we'd be very happy to take you through the costs and benefits.
So thank you very much. And we end the session. Thank you.
Thank you.
Thank you.